Have you ever noticed something strange? Two people earn a decent salary. They live in good neighborhoods. They drive reliable cars. From the outside, everything looks fine. But month after month, there's nothing left. Not because they're irresponsible. Not because they're lazy. But because of a problem most middle-class people don't like to talk about. Let's slow this down and look at it calmly. Imagine a fairly normal situation in the US or Europe. You earn around $65,000 a year. After taxes, that becomes roughly $4,000 a month in your bank account. You don't feel rich. But you don't feel poor either. Then life starts taking its share. Rent or mortgage, $1,500. Car payment and insurance, $600. Student loan or EMI, $400. Utilities, phone, internet, $300. Before food. Before entertainment. Before saving. You're already at $2,800. Now add groceries, fuel, and a few dinners out. Another $700. You're at $3,500. What's left? About $500. That money is supposed to cover savings, emergencies, travel, gifts, and living life. So what do most people do? They don't panic. They don't feel reckless. They swipe a credit card. They choose a monthly payment. They stretch things just a little. Because everyone else is doing the same. This is where the real problem starts. The middle-class money issue is not low income. It's high fixed commitments. Most financial stress doesn't come from big mistakes. It comes from stacking reasonable decisions on top of each other. A slightly nicer apartment. A slightly newer car. A lifestyle that matches your peers. Each choice feels logical on its own. Together, they quietly remove flexibility. The system encourages this. Banks don't ask if your payment limits your future. They ask if you can afford it this month. Employers celebrate salary increases, but never talk about how fast expenses rise with them. And socially, staying on level matters. If your car payment is $600 a month, that's $7,200 a year. Over 5 years, that's $36,000. Not counting interest. Not counting repairs. Not counting the opportunity cost. That same money, invested modestly, could quietly grow into security. But instead, it disappears into something that loses value every year. This isn't about cars. It's about how monthly payments feel smaller than total cost. Psychologically, humans are wired to think short-term. Monthly feels safe. Long-term feels abstract. That's why people earning more often feel more stressed, not less. As income rises, so does lifestyle. But savings rarely scale at the same speed. The result is a comfortable-looking life. With very little margin for error. One medical bill. One job change. One unexpected event. And suddenly, the pressure appears. Financially intelligent people don't live dramatically different lives. They don't avoid enjoyment. They don't live in fear. They simply protect one thing very carefully: flexibility. They are less impressed by appearances. They think in totals, not payments. They value cash flow and optionality over status. They ask quiet questions most people skip. What does this commitment limit me from doing later? Does this expense buy freedom or remove it? Am I choosing comfort now at the cost of control later? This mindset isn't extreme. It's calm. It's unemotional. And it compounds over time. The middle-class problem isn't that people don't earn enough. It's that the system teaches them to spend first and think later. Not out of stupidity. Out of normalization. Once you see it clearly, you stop feeling guilty. You just become more aware. And awareness, over time, quietly changes outcomes. If this way of thinking helped you see money a little more clearly, you can support the channel by liking the video or subscribing. Nothing dramatic. Just clarity, one idea at a time.